Hello and welcome to another edition of Stockwatch. So as we get into the trading week, we hear that Google have been fined yet again, this time by French authorities for allegedly abusing their power. And this fine now circumvents to 220 million euros. So France's competition watchdog have said that Google has been promoting its own advertising services online, which has been a disadvantage to its competitors. Google have stated that they will make changes to their businesses, but this isn't the first time I've reported on Stockwatch, and even in the past that Google have been fined or been in breach of power. It was fined nearly 1.5 billion euros in 2019 by the EU for blocking rival online searches for advertisers, and 50 million euros in the same year by French data regulator for breach of data regulation rules as well. I mean, the list is endless. I've just been checking it on for the morning news. The UK Competition Authority also fined the company a record 4.34 billion euros in 2008, and that followed an almost 2.5 billion fine in 2017 for hindering rivals of shopping comparison websites. So, you have to think that when Apple said it will change its business advertising business model, it will have to change it pretty quickly, because it is getting fine after fine. So that amounts to 2 fines in 2019, 1 this year so far, and a couple in 2018 and 2017. So obviously the trend keeps on going for Google. So how detrimental will this be in the long term? It is mainly in Europe though, however. It hasn't really breached the US market yet. So something to keep an eye on in the next few trading sessions, at least as we're closing on the half of the year. And also just to look on Apple as well. A lot of its employees are very irate at the moment after Tim Cook, his plans for a widespread return to the office by September. It's basically, rubbed a few of the employees the wrong way, where they're having to choose between their family and coming into the office, where a lot of people would say that, well, before the pandemic, the office 5 days a week was a standard operating procedure, but now a lot of the employees want to have only 3 days to return to work. And actually some Apple employees have already quit due to these measures that are supposed to be in by September. And this memo came last week, when, as I said, the Apple boss said workers should be in the office at least 3 days a week by September. So you have to wait and see if not only is it going to be detrimental for Apple, but other companies as well. They're expecting their staff to return to work and get back into the daily grind of coming into the workplace on a daily basis, basically, and even weekends. So we'll wait and see. But Google, I want to accentuate what's happening. I've picked up on it in the past Stockwatch videos, but this hummingbird action where we're just hitting this top trend line, we've broken out of it slightly but fallen back into it. So I'll just extend it a little bit more, and this is what my next target is. This is on the daily. I've just actually taken the trend line off, which is probably not very helpful, but oh, I've got the wrong one there. So I'm just looking to see what the opportunities are, because as I said, we've fallen in and out of this trend line slightly, and now I'm just looking to the upside. We are looking to see, I'll just zoom in for a bit more clarification, if momentum doesn't keep pushing higher, we could see a bearish divergence if these if the candlesticks do breach the top border of this trend line as well. So something to look out for in the near term as we look on the intraday chart, and we are hovering quite sporadically over the top border of the Ichimoku cloud. So that's very significant for another push to the upside. I'll just be keeping an eye on if there's any signs of any divergences on the RSI to keep pushing us higher. And if we can get that top trend line once again and push for more record highs. We've got this, I would say it's probably a false break at the moment, but if we can eclipse that price, then bias will continue to the upside. So that's what I'll be looking out for in the next few trading sessions. Apple as well, I'll just bring it down to a daily chart just to show what the opportunities are. So the last time I looked at Apple, I was looking at these tops and bottoms that it's been making in the last few trading sessions. We had this bottom out at the beginning of March at the 116 zone, and then we had another top roughly about the 136, 137 area as well. So just looking very, very buoyant now for Apple as it tries to push through the Ichimoku cloud. This is the bottom border here, so that's a very nice confluence level. If we do break that, I'm expecting another push to at least the 130 zone at least. That's only $4 or $5 away, so it's not anything to be deterred by. It should probably happen in the next few trading sessions. And as I said, on the 4-hour chart, on the intraday, we are still, weighed down a little bit by the Ichimoku cloud, but a breakthrough there. And as I said, my first target will be the 130 zone, which is a nice confluence level, roughly about the top border of the Ichimoku cloud at the moment. So something just to look out for in the next few trading sessions. And hopefully Google don't make any more or get any more lawsuits or fines in the next few months ahead, but we'll wait and see about that. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.